Hello, everyone. Thank you for joining Lender Chat, sponsored by KFP Investors LLC, your favorite mortgage brokerage for investment real estate. I am Chris Fleming, and full disclaimer here: we are not professional digital content creators. We're two friends who are sharing some information with you that you might find useful in your investment real estate adventures. So allow me to start out with our disclaimer. KFP Investors LLC does not give legal, tax, economic, or investment advice. KFP Investors LLC disclaims all liability for the action or inaction taken or not taken as a result of communications from or to its employees, contractors, clients, prospective clients, or participants. Each person should consult their own counsel, accountant, and other advisors as to legal, tax, economic, and investment advice. All right, that's out of the way. So I am here with my friend Beth. Beth, I'm going to let you introduce yourself because I think
Okay.
that you will do a better job of it than I will. But Beth is someone that I met at a real estate investors networking meeting, and she is a very clever and resourceful lady. Beth, please tell us about yourself.
Well, first of all, thanks so much for having me, Chris. I am currently a banker in Mt Juliet for a small community bank and a lender, as well as being a fledgling investor, but we're going to get into more detail on that in a minute. I'm one of the few native Middle Tennesseans. I grew up in Franklin. We're hard to find anymore.
That's right. You're a
Yeah.
unicorn.
Yeah, that's right. So I grew up in Franklin, went to school at UT Knoxville. When I came back, Franklin had changed completely. Nashville was starting to change as well, but have then since made my home in Mt Juliet, Tennessee, and just love everything about living here. I have two kids, one in college, one middle schooler. I'm a single mom, so a lot of responsibilities, but I love what I do and living in Mt Juliet and helping investors and business owners. So that's just me in a nutshell.
Fantastic. Fantastic.
Mhm.
And so, how did you get into investment real estate?
Well, and I work in it in two capacities, really. As I said, I'm a lender. I work for a community bank, and I got into that completely by accident. We'll get to that in a minute. I'm also do have one rental property. This is the second time in my life that I've had a rental property. And I got that by actually purchasing another home as a primary residence and keeping the home that I moved out of. Took a line of credit on it for the down payment on the new house. Always really wanted to, I always saw the value in having real estate as an investment, but not having a lot of excess capital, found a way to do that, fortunately. I see initially I think I started it as, the way to get a little bit more money out of the property down the road. But the more I'm learning through Real Estate Investors Network, the cash flow is such an important piece of that, so much more than even the appreciation. My plan was initially to sell the property in a few years and take that money, shore up my savings and then potentially invest in other properties. But the more I learn, the more I think I'm going to try to find a way to keep that property
Very
and build on
good.
it. Yeah.
Yeah,
So,
very good.
yeah.
How long
Now,
have you had it as a rental?
going on 2 years. Mhm.
Okay,
Yeah.
very good.
Yeah.
Yeah.
So haven't had any problems. I did choose to use a property manager. Um, Being on my own, purchasing a new property, doing a renovation, and converting that to a rental, I really needed to offload something. So
Yeah.
using a property manager for me took that, responsibility away. He's very reasonable and has done a great job. It's nice to see that deposit every month and just every once in a while an invoice for a service, but I didn't have to make a single phone call to get that
All
done. So
right.
yeah.
Fantastic. Very
Hmm.
good. We like
Yeah.
that.
Yeah.
All right. So, you said that you came upon lending accidentally and you would tell
Mhm.
us more about it.
Sure, sure. I had been working in human resources, worked in the nonprofit sector, the healthcare sector. When my children were little, when my daughter was little, I decided to kind of get off the corporate hamster wheel and do some HR consulting on my own. That went pretty well for a while. And then in 2008, those jobs basically were hard to come by. My focus was recruiting, so there weren't many jobs openings, so wasn't much recruiting to be done. So I found myself in a position of needing a job, a W-2 income, and just networking like we all do. I have a good friend who is in banking, and they happen to have an opening. So I started as a personal banker. Was pretty quickly moved into a branch management position as they did some restructuring. So I was really learning everything from the ground up, from just walking in the door. My job has always entailed some amount of lending, starting with personal lending, car loans, HELOCs, that type of thing. Then moved to a different bank into a business banker position, had the opportunity to bring a bank to the Mt Juliet market from another market. So that was fun to open a new bank, and then expand my experience into business banking and more lending, basically. So I'm currently a lender, vice president with Southern Bank of Tennessee in Mt Juliet. And I really love what I do, working with business owners and investors to help them achieve their dreams is really a passion of mine. So it's been a lot of fun. Love to get to know the business owners and my customers. So
from my banking days, that's something that I always enjoyed so tremendously. I mean, certainly helping consumers with their financial needs was very enjoyable, but helping business owners to grow their businesses and having that positive effect on all of their employees was super exciting to me. So I get that. That's awesome.
And it's just so interesting to learn about businesses, the different ways that people make money, the different kind of businesses they have, and to really learn about how they make money, what they do. It's just pretty fascinating.
I completely agree. So do you you work quite a bit with real estate investors now, correct?
I sure do. Yeah.
Since that's how we met, was a real estate investors meeting.
Exactly.
I figure you've got some experience there. So tell us a little bit about how you do lending for investment real estate.
Okay, great. Investors will come to us with a need to either purchase a property, be it commercial or residential property, for the purpose of making money. So it's a business loan that we keep in-house at the bank. So I don't do any government-backed Fannie or Freddie loans, mortgages. I do bank loans. We again, help people. We'll look at the collateral. Typically, we serve people who are in our market, our footprint, which is Middle Tennessee and East Tennessee, and who have the collateral preferably in our market as well. However, we do investment properties out of state, depending on those state laws and everything.
Okay.
Yeah. As long as the investor is here in Middle Tennessee in our market. So we help them to either acquire those properties. We'll do an analysis on those to make sure it's a good investment, make sure that it does cash flow, or to take cash out on properties that they currently have, so that they can then go on to make future investments. So once they've established or gained a certain amount of equity in the properties they have, they can use that equity then to go purchase additional properties.
Okay, very cool.
Yeah.
And so with the loans that you do there at the bank, do you do many blanket loans where you encumber multiple properties?
We certainly can do that. I'm looking at one of those currently.
Okay.
So we could take this particular investor has at least 10 or 12 properties, and we're looking at taking equity from 2 of those properties for a line of credit for them.
Okay, awesome. Yeah. That's one of the things that really intrigued me is as a brokerage, we have about a dozen lenders that we work with on a regular basis and access to hundreds more, but we don't have a line of credit option. And so knowing that you do, I love that for the folks who need that.
Good. Yeah, and we can do that. And whether you hold the properties in your individual name or an LLC, it's still a business purpose loan. It still fits in as an investment property commercial loan for us. So we can do that in an entity name or individual names.
Okay, perfect. Yeah. And so just as a general rule, what kind of loan to value are you doing on investment real estate?
Typically, it needs to be 80% or less. on real
Okay.
estate. We're finding that people are having to put in a little bit more on the front end now in order to make the property cash flow. So usually that's going to be 25, sometimes even 30%. With
Mhm.
rates being higher now, obviously loan payments are higher. So
Mhm.
that property to cash flow, we need that more equity in on the front end.
Okay. All
Yeah.
right. Very good.
Yeah.
And do you have seasoning requirements for refinance?
We do not. We do not.
Okay.
Now, our mortgage, we do mortgages, and they have different requirements as well. So, I'll give that caveat. If it's through our mortgage department, there probably are, but that's not my area of expertise.
Well, we're speaking
Mhm.
strictly
Yeah.
non-owner occupied.
Yeah.
So,
Yeah,
um,
exactly.
yeah.
And,
So,
it sort of depends too on what kind of work has maybe been done to increase the value of the property.
Mhm.
So that's a consideration. We just look at we're fortunate in that we can look at every situation on a case by case basis. Obviously, we have guidelines and regulations. We have to be fair to everyone, but we can look at things on a case by case basis and, determine if it's a good deal for the bank and a good deal for the investor.
Mhm. Love
Mhm.
that about
Mhm.
smaller banks,
Yes,
that
absolutely.
um, there's a lot more case by case analysis that's available for smaller
Exactly.
banks. Yeah, I love
Exactly.
that.
Yeah.
And so, so how are you working towards improving the investor community? What
Mhm.
is your typical structure? What do you encourage? Guide my thoughts
Mhm.
here.
Sure. Yeah, absolutely. As a bank, obviously, we have regulations and guidelines that we have to follow in terms of
Mhm.
ensuring that the investor can pay back the loan.
Mhm.
That's number one, very important thing. So the way I feel that we guide them is to make sure that number one, they have a certain amount of liquidity. Um,
Mhm.
just in terms of the investor profile itself, that they have a certain amount of liquidity, that the income on the property is going to be sufficient to service the debt, and that there's a global income available as well, if there is a global income, to make sure that that is sufficient also. So, as far as guiding people, just I have a little screenshot I can share with you if you'd like, that
Yes,
can
that would be
show.
great.
Is it a good time to do that now?
Yes.
I can put the numbers in and show someone what the debt service coverage is and what the cap rate is. So,
Okay.
overall, we can look and see if something is a good investment. And I'll pull that up now, and show you actually a, a deal that I'm working on currently. Let's see. Okay, can you see that?
Yes.
Great. Okay. This property is mixed use. It's commercial and residential. It's the purchase price is 680,000. You see here, and this auto calculates right now at 20% on the down payment, showing a loan amount of 544,000. Interest rates are up there right now, as I mentioned before. That makes it a little bit difficult to get a property to cash flow. And down here in this
Mhm.
yellow box, you'll see what I'm talking about.
Mhm.
1.2 is the target for our bank for that to cash flow at 1.2 times. And our terms are typically 20 years. Sometimes we can extend that out to 25 years, depending on the circumstance. So this gives me
Mhm.
the loan payment, the loan amount, the monthly payment. It does not include taxes and insurance, so we have to take that out to determine what our net operating income is on a property.
Okay.
I like to use real numbers, and stop me if you have a question. You want me to
I
slow down?
do. On the
Okay, yeah.
20 years, is that fixed?
Right here, the
Uh-huh.
no, that's not fixed for that long. Typically, there will be a
Okay.
maturity, sometime between 5 and 10 year maturity. The
Okay.
fixed rate will be for 5 years. Typically, we are
Okay.
doing some shorter term sometimes.
Okay.
And then we would float that rate from 5 to 10 years if we offer a 10-year maturity.
Okay. So it would be
Yeah.
probably annually adjustable with
After
a
five
10-year
years, after the
maturity.
fixed rate
Okay.
period, yes, it would adjust with prime annually, somewhere in the range of prime plus one or so.
Okay. All right. Very
Yeah.
good. Thank you.
Yeah. Yeah. Thank you. So we can look down here at the net operating income by taking the lease amount, the gross lease amount.
Mhm.
In this case, there's a commercial piece to this property, which is $4,500 a month, and then a
Mhm.
residential part that's $1,800 a month. So it's got really good income on the property at
Mhm.
$6,300 a month. We'll
Mhm.
take anywhere between 5 and 10% for vacancies and maintenance or repairs.
Mhm.
We know the property taxes in this case, it's not in Davidson County clearly, and what the property insurance is. So I was able to put those real numbers in, but we can estimate that if we need to. We'll typically deduct, if we don't have the exact numbers, we'll typically deduct 20% of the gross monthly lease amount to get our net operating income, at least to get an idea from an underwriting standpoint.
Okay.
So then we get our operating income down here at $5,086. And we get our property, the debt service coverage ratio, which is basically the opposite of a debt to income ratio,
Right.
at 1.08. So that means for every dollar you have in debt, you have $1.08 in income.
Mhm.
But we really need this to be closer to 1.2, 1.15 at least.
Mhm.
So the best way really to accomplish that, we already had them increase the rent amount that they're going to be getting on this commercial property. That's
Mhm.
one way to increase the debt service coverage ratio. Um, expenses are what they are. It's difficult
Mhm.
to adjust those much. But one thing we can do is adjust the down payment amount. So if I put in 25% up here in this calculation, you can see that I get much closer to that 1.2 target.
Mhm.
Um, in this scenario, the cash flow, the global cash flow was very strong.
Okay.
We need this. The global, and let me back up to the global cash flow is the guarantor, all of his business entities, sometimes multiple guarantors, in this case, just one. So he has numerous other business entities that generate cash for him that we're able to
Mhm.
use to get our global cash flow.
Mhm.
This is the project specific cash flow or debt service coverage ratio, just specific to this property. So we can come a little bit below that 1.2 since the global was so strong and the credit was
Okay.
excellent.
Okay.
Yeah.
All right.
Any
Very
questions
good.
about that, or does that make some
I'm just
sense?
really I'm really glad that you described the global cash flow,
Yeah.
because that's something I try to share with folks, and I am thrilled that you shared how debt service coverage ratio works,
Okay.
um, because a lot of folks. So, uh, do you also at some point combine the global cash flow with the DSCR to get a total ratio there, or
We
you just
do.
leave them separate?
Mhm.
Okay.
We do. And really, when I say global, that does include the project specific or the DSCR. So that includes the
Okay.
guarantor,
Oh,
all of his
gotcha.
entities, and this property. So that's
Okay.
everything. Yeah.
Okay. Gotcha.
And
Very,
just a
very
quick
good.
little note on cap rate when you asked about guiding investors. I guess it depends on who you ask to determine whether or not this is a good investment. But I think at almost 9% cap rate, it looks like a very good investment. That's the relationship
Uh-huh.
between the purchase price and the net
Uh-huh.
operating income. So it's
Mhm.
basically how much money you're making on a monthly basis or an annual basis on this investment. It doesn't take into account the appreciation of the dirt, just the cash flow. So in this
Right.
case, I'd
Right.
say that's a pretty good investment.
Yeah. Thank you for sharing that with us as
Yeah.
well. I think there's a lot of language and terminology that
Mhm.
we in the financial realm take for granted, and
Exactly.
sometimes I think
Yeah.
our clients are probably wondering, "What
Yeah.
did you just say?"
Exactly. And just one more comment too on the debt service coverage ratio, which we internally
Yeah.
call the project specific cash flow.
Uh-huh.
That's so important for a bank because if for some reason there's a default on the loan and we need to exercise our assignment of rents and leases, we need to make
Mhm.
sure that those rents are going to cover the loan payment. So that's why that project specific cash flow is so important to a bank.
And
Mhm.
Beth, I know this is not something we discussed beforehand,
Mhm.
but it's something I frequently address with borrowers. Does the
Mhm.
bank want to own the real estate?
No,
No.
no, we do not.
Yeah. As lenders, we do not want your real estate. If we
We do
wanted
not.
real estate, we would just buy real estate. What we
That's
want
right.
is our money back with a little bit more. Uh,
Exactly, exactly.
yeah. So I frequently encounter, well, the lender just wants to take the property. No, we don't. If we
Absolutely
wanted
not.
property, we would buy property.
Right.
Right.
Yeah.
So thank you
We're in the
very
business of
much.
lending, not managing
Right.
properties. Yeah.
Right. Right.
Mhm.
Um, yeah. So in fact, in my personal life, I do not own any investment real
Mhm.
estate or rentals personally, because I prefer to invest in other people's real estate projects.
That's great.
Um, because I don't want to do the whole management
Mhm.
part um, and repairs and all the rest of it. I'd rather look. Let me just buy a little piece of your property, and then
That's great.
I'll sit back and be quiet, and you send me money.
Mhm. That's great. Yeah, yeah.
Yeah.
I'm learning so much by, from people like you that I've met through the Real Estate Investors Network that there's so many different ways to be involved in real estate that
Yes.
I never knew before. So it's
Yes.
really interesting to learn that. Mhm.
Yes. Yeah.
Yeah.
And one of my very intriguing paths, I'm investigating more and more, buying notes on real estate,
Yes.
because
Okay.
again, I don't want to own the real estate. I want
Mhm.
the money.
Cash flow.
So
Mhm.
yeah, let me know if you guys have any portfolio notes that you
Okay.
would like to part with.
I'll look into
Uh,
that.
yeah, for sure. And so one of the things that I always like to ask people in these conversations is, if you could give your younger self three pieces of advice, what would they be?
Mhm. That's such a good question. And I think one goes back to really listening to and following your instincts. I feel like, or have proven to myself later in life, that some of my instincts regarding business and real estate have been good, and wish that I had listened to that earlier on in life, instead of being a little bit more afraid to break out and make that type of investment.
Mhm.
Another thing is, when you have an interest in something, I've always been interested in real estate, but again, not known all the
Mhm.
different ways that you can be involved in investing. I thought you were a real estate agent or a lender, and that was the extent of it. Had
Uh-huh.
I investigated a little bit more, I would have found some other ways to have gotten involved in real estate, whether I chose to do that full time or as a side gig, and what I'm doing
Mhm.
now, trying to shore up some assets for my retirement.
Mhm.
Maybe starting that earlier on, having done a little more research and investigating, because there was a little seed there, a little seed of
Uh-huh.
interest, and I kind of wish I'd explored
Yeah.
that a little further. And then also not being afraid to do something very different than what we've all, or a lot of us maybe, have been raised to believe and to understand is the way you go about
Yeah.
making a living.
Yeah.
My parents were very conservative and, worked the same job for 30 years, put aside their money in the stock market, and have retired comfortably. And that is wonderful. There is another way to do it. Some might consider it riskier. I guess that depends on who you ask.
Uh-huh.
But there's a different way to do it. And being involved in businesses and real estate is certainly legitimate. And I've learned so much from my customers,
Mhm.
just from the standpoint of real estate investing, that better late than never. I say. So, yeah, yeah.
Yeah. Yeah. If I could piggyback on that, I would say seek advice and take advice from people who are doing what you want to do.
Exactly.
Um, because I also, I spent a lot of years that, debt is bad, and you buy your
Right.
primary residence and you pay it off as quickly as possible. And,
Right.
you put your money in your retirement funds in the stock market, and
Hmm.
you don't look at the statements and just hope that everything is up when you
Right.
actually retire. And
Exactly.
yeah, yeah,
Hmm.
I did not know until just a couple of years ago that you can use your IRA funds in a self-directed IRA to invest in real estate.
I just learned that myself. I had not
Yeah,
heard that either. Yeah,
yeah.
that's interesting.
You can do that with your child's college. What is it? College education
529
savings.
account.
No, the
529. Okay.
CISA. I can't remember what
Okay.
it stands for. It's
Yeah.
college education savings account. Maybe
Okay.
that's
Yeah.
what it stands for.
Yeah.
Yeah.
I didn't know
So
that. Hmm.
yeah.
Hmm.
So you can use those funds and grow them on and I'm not a financial advisor, guys. Somebody talk to somebody who knows what they're talking about with this. But you can put those funds into self-directed plans and use those plans to uh, invest in real estate in a tax advantaged way.
Wow.
Uh,
Okay.
so yes,
Interesting.
so that's very fun.
Yeah.
If you
Mhm.
would like some information and resources on how to find out more, reach out to me, and I'll be glad to send you to people who know what they're
Mhm.
talking about. Um,
Exactly.
yeah, so
That's
I
great.
actually am working on an account for my 11-year-old,
Mhm.
for her to hopefully begin to invest in real estate here very shortly.
That's great.
Um,
Start them young.
yeah, yeah.
Great.
And so I'm so sorry. I think I cut you off. Did we get to three pieces of advice?
That was it. Yeah. That was it.
Okay.
Yeah. Yeah.
Well, no pressure, but you have to come up with one more. No, I'm kidding. I'm teasing
I probably have a couple, but
you.
yeah.
Um, but yeah, certainly taking advice from the people who are doing what you want to do. And no
Yes.
offense to your parents.
Not at all.
I'm yeah, I hope that they are having a lovely life and are very satisfied with
Mhm.
what they've been able to accomplish, and it sounds wonderful.
Yeah.
But absolutely, that's not the only path, and that's what so many of us were
Mhm.
taught our entire lives: is this is the way you do it.
Exactly. You
And
have your 9 to 5, you save your money, and then you retire.
right, right, and that's not a bad way to do it. It's just
Not at
not
all.
the only way to do it.
Exactly. Exactly.
Certainly. So, so how can we and our network help you at this time? What sort of resources are you looking for?
Well, I'm always looking for new customers. We as a bank are always looking for new customers and to help investors. We are lending money. I do consumer loans also. So bridge loans, HELOCs, car loans, small business loans, equipment purchases, real estate purchases for their businesses, and investors. So I'm always looking for new business in those three areas. And deposits. Banks now are needing more liquidity. That's across the board.
Mhm.
So we are, looking for deposit accounts too. If someone is considering doing some real estate investing in the future or looking for a new community bank, I would recommend becoming a customer, moving your banking, your deposits to a community bank, to a community banker who you know, and developing that relationship, starting with checking accounts and your savings.
Mhm. Mhm.
So that's pretty much it for me. Is that we're always looking for new customers and new deals to do for them.
Very good, very
Mhm.
good. And
Yeah.
what about you personally in your real estate journey?
Well, I'm looking to learn as much as I can right now from people who've done it, people like you. So I'm really just absorbing everything that I can and taking any advice on how to grow a real estate portfolio for myself and how to
Uh-huh.
add to my retirement as a single mother and
Uh-huh.
primary financial provider for my kids. My retirement's kind of gone on the back burner, so I'm looking
Uh-huh.
for ways to supplement that so that it can happen someday.
Sure,
So,
sure.
yeah, yeah.
Um, well, obviously, as I've mentioned, I'm a fan of partnering with real
Yes.
estate
Mhm.
investment real estate operators. I
Exactly.
do not want to be an investment real estate
Mhm.
operator, but I
Uh-huh.
love to partner with them.
Okay. And I would be
Uh,
open to those opportunities as well, very much so.
okay.
One thing I keep hearing is that, we all have something to bring to the table. I
Yeah.
don't know if I 100% know what that is, but I'm open to conversations with other investors for partnership opportunities for sure.
All right.
Mhm.
Very good.
Yeah.
Very good. And how can we contact you?
I can hold up my card here, but I think it'll be backwards. But at least you'll get the spelling of my name, hopefully. It's Beth Schulze. It's different. It's SCHULZE. My email address is bschulze at southernbankoftn.com. And my phone number there is 615-754-0031. So feel free to call or email anytime. And if you have a deal you'd like for me to look at, I say just send it my way and we can evaluate it and see if we can help.
All right. So,
Yeah.
folks, you've heard it here. For all of you who have been asking me for a line of credit on investment real estate, Beth, I bring you Beth.
That's
This is the
me.
lady who can accomplish that for you. Um, very,
Definitely.
very good.
Definitely.
Well, Beth, thank you so much for sharing your time with me and with us today.
You're very
Um, I
welcome.
I really appreciate the explanations that you've provided, and
Okay.
um, I love for people to be educated about all the different ways there are to finance real estate.
Yes.
There are many, many, many options, and you are welcome
Mhm.
to reach out to either one of us and we will help you find them.
Yes.
So
Thank you so much
uh,
for having me. This has been fun.
you bet, you bet.
Yeah.
Thank you so much, and we'll
Okay.
talk to everyone very, very soon.
Thanks. Bye-bye.
Bye.